Imagine finally saving enough for a down payment after years of hard work. You've found the perfect neighborhood, your mortgage pre-approval is ready, and you're just one signature away from owning your dream home. But suddenly, a thought stops you cold. What if I buy today, and prices crash next year? What if mortgage rates drop right after I sign? Or worse, what if homes become completely unaffordable by 2026? This exact dilemma is stopping thousands of Canadians from making the biggest financial decision of their lives. Some experts claim 2026 will finally bring relief for homebuyers. Others warn that waiting will cost you even more. So, who is actually right? In today's video, we're breaking down what's really happening behind the scenes in Canada's housing market, why analysts are hyper-focused on 2026, and the critical factors you must understand before signing any mortgage paperwork. This isn't about guessing the future, it's about protecting your hard-earned money. Let's start with the elephant in the room, interest rates. Over the past few years, Canadians have faced the most aggressive rate hiking cycle in decades. High interest rates mean massive monthly payments, which drastically cuts down your buying power. Think about it. A family that could comfortably afford an $800,000 home a few years ago might now only qualify for $650,000. Their income didn't drop. The cost of borrowing just skyrocketed. This forced first-time buyers to wait, sellers to lower expectations, and investors to back off. But here is where 2026 gets incredibly interesting. As inflation edges closer to the Bank of Canada's target, economists predict that borrowing costs will gradually ease. Lower rates sound like a victory for buyers, right? Well, not exactly. There's a massive catch. Lower interest rates don't automatically make homes cheaper. In fact, it often does the exact opposite. When rates drop, buyers rush back into the market. This sudden spike in demand pushes home prices right back up, especially in cities where housing is already scarce. So, while you might save money on your monthly mortgage rate, you could end up paying significantly more for the house itself. Focusing solely on interest rates is a trap. This brings us to the second major crisis, Canada's housing supply. The math is simple. Canada is welcoming new families, immigrants, and young professionals faster than it can build roofs to cover them. Imagine 100 buyers fighting over just 70 available homes. Even if some people decide to wait, demand still heavily outweighs supply. That's basic economics, and it keeps a permanent upward pressure on prices. Yes, the government is announcing new housing initiatives, changing zoning laws, and promising millions of new homes. But here's the reality check. Houses take years to build. Planning approvals, labor shortages, and rising construction costs mean these promises won't turn into actual reality overnight. This is exactly why top analysts are skeptical about any dramatic price drops by 2026. Beyond supply and rates, there is a hidden driver that most people completely ignore: market psychology. Real estate isn't just driven by numbers, it's driven by raw emotion. When headlines scream that prices are skyrocketing, FOMO, the fear of missing out, kicks in, and people overpay. When headlines predict a housing crash, fear paralyzes buyers, even if their personal finances are perfectly stable. The smartest financial decisions are made by people who completely mute the media noise and focus on one simple question: can I comfortably afford this home even if the economy takes a downturn? Let's compare two buyers. Buyer number one tries to time the market perfectly, waiting year after year for prices to hit rock bottom. Meanwhile, they keep paying rising rents, and the perfect moment never arrives. Buyer number two ignores the market timing. They buy a home they can genuinely afford, lock in a budget-friendly mortgage, keep an emergency fund, and plan to live there for the long haul. Who wins? Statistically, buyer number two. 2026 isn't a magical year where Canada's housing problems will suddenly vanish. It will simply be a new chapter with its own unique risks and opportunities. So, should you buy now, or wait until 2026? If you're waiting purely because you're hoping for a massive housing crash, you are playing a dangerous guessing game. No bank, economist, or social media influencer can predict the market with 100% certainty. However, if you're waiting because you need to save a larger down payment, fix your credit score, or pay off debt, that is a smart, calculated move. Buying from a position of financial strength will always beat rushing into a market out of panic. Let's look at the two realistic scenarios for 2026. Scenario 1. Mortgage rates continue to drop. Buyers flood the market, bidding wars return, and sellers regain total control. You get a lower interest rate, but you pay a premium price for the property. Scenario 2. The economy slows down, and unemployment rises. Housing demand cools off, and you get a better deal on the price. However, banks become incredibly strict, making it much harder to get a mortgage approval. As you can see, every market scenario has a trade-off. There is no perfect time to buy. There is only how prepared you are. Instead of stretching your budget to the absolute maximum based on what the bank approves you for, leave yourself some breathing room. Remember, homeownership isn't just a mortgage. It's property taxes, insurance, utilities, and unexpected repairs like a broken furnace or a leaking roof. True financial freedom is owning your home without constantly stressing over the monthly bills. At the end of the day, your home is a place to live before it is an investment asset. If you are buying a house purely to flip it or watch it double in value overnight, you are speculating. But if you are buying a place to build a stable life for your family within your means, you've already won. So, don't ask what the market will do in 2026. Ask yourself if you are truly ready. Build your savings, reduce unnecessary debt, and understand your options. When the right house fits your right budget, that is your perfect time to move. The biggest winners in Canadian real estate aren't the ones who time the market. They are the ones who are financially prepared when the right opportunity knocks. If this video helped clear the confusion, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss our deep dives into Canadian real estate and smart money strategies. Thank you for watching. I'm James, and I'll see you in the next video right here on Canadian Finance Hub with James.